Let's start at the top. Macroeconomically, South Africa's got a problem. We have a housing backlog of something like 3 million houses since democracy in 1994. It's a political hot potato, this issue, and the government's trying to find all sorts of mechanisms to intervene. Is the approach the correct one?
I'm not sure. The new R1 bn housing fund presupposed that the banks aren't lending, but the previous Minister of Housing, Lindiwe Sisulu, was quoted as saying is the banks didn't only move onto the dance floor in meeting their financial services charter commitments, but they actually pushed everybody off, and she was right. The banks are lending. I mean, if you take out the aftermath of the economic crisis where they weren't lending to very many people, right, I think they've really exceeded all expectations. So I think the R1 bn fund is a help, but it does presuppose that the banks aren't lending where they should be. I think the question's much more is what's happening where they can't lend, and in that sort of gap market.
That's where the challenges lie. Let's talk about that gap market, because here we're talking about people who earn enough money not to be qualified as low income earners and so need to be subsidized by the state, but don't earn enough to be granted a mortgage. All sorts of interventions are coming through. There's talk of a housing guarantee from the government. There's also talk of setting up some sort of an investment fund for them, various donors coming through internationally. The issue here is who should bear the risk, because if they're not quite within the category of those to be subsidized by the state and not suitable to be mortgage holders from a bank, how do you spread the risk?
Well, I think spreading the risk is absolutely important. I mean, if you look at the origins of the financial crisis, right from the Clinton administration through the Bush administration, banks were forced to make loans that they shouldn't have. If you look at the amount of home ownership in America, it went up from something like 63% to 69%, the balance being rental housing. And this sort of bred the subprime industry to say. So if we come back to our own gap market, it's about those people who can afford a starter house around the 220,000 mark. And the question isn't really a lending question, it's an affordability question. And the people who earn sort of that magic between 3,500 and 7,500 rand a month, right up to, if you quote Old Mutual, up to the 15,000 rand a month, where they can start affording those. That gap market needs a question of balance of risk, and certainly government's got to come to the party, but has to look at the affordability question.
Now let's look at the property sector, which took a real knock due to the credit crisis and the recession in South Africa. We're expecting to see property prices and sales rise somewhere in the region of 3 to 6% this year alone. Right. But at the same time, people are still struggling with rentals, especially in the bigger cities like Johannesburg and Cape Town, and that's where you see a lot of the demand. How is this segment of the market affected by these cycles within the property market?
Well, we finance TUF, the Trust for Urban Housing Finance, finances exclusively downtown, particularly Joburg, but also Pretoria and Durban. And we're finding that rentals have increased substantially with the economic boom up until the end of 2008, and have started stabilizing simply because a lot of people have lost their jobs. And I think that sort of supply-demand issue in the affordable market, say the 1,500 rand to 3,000 rand a month rental pool, I mean, it is obviously affected by the number of people who've lost their jobs, the economic downturn. But we're finding that landlords are generally 100% full in that particular market, and we're talking about your traditional Hillbrow, Joubert Park, those kind of areas. But it's not immune, of course. Johannesburg and the inner cities, because they're so centrally placed, are the basis of the demand for rental housing is multi-economic. So if manufacturing's taking a hit, or financial services, government and other sectors are maintaining that demand.
All right, Sasha, let me bring you in here, because in terms of who will lend to this segment of the population for affordable housing, if not quite low-cost housing, there's been the issue of land and the allocation of land and the affordability of land. And this is where property developers have found it particularly challenging, is the financing of land acquisition before you even begin the process of developing that land. We know that government has introduced a buyback system where 234 million rands has been allocated to buying unproductive land. Would that help to mitigate, or do we still need another more innovative mechanism for accessing land and then selling it to property developers at an affordable price?
Exactly, I think that is the case. You know, I was astonished yesterday. I was driving around with my oldest daughter, and I drove from Malibongwe to William Nicol, and there was an entire open space on the left-hand side there, and I was wondering who that belonged to. Now, there must be pockets of land, because ultimately it's about location to work, because often if you've got a low-cost house, then transport's going to be a big input cost for you too, and you don't want to be too far away from work. So we do have a lot of land in South Africa. That's one thing we're blessed with. You know, maybe not in Cape Town around the mountain, but every single other big city doesn't suffer from a lack of land. It's just about location to work, because if you want to build low-cost housing, you better have a good infrastructure and cheap enough to get low-paid employees to work.
Okay, Paul, just a final and brief question to you. This is where the investment potential lies for anybody who is cash flush, is within property development for the affordable housing sector. The question, though, is the property developer can't afford the land and doesn't want to have to bear the risk of that acquisition. What's the middle ground?
Well, the government set up the Housing Development Agency, which was particularly designed to find pieces of land and put them on the market for development. I think that property developers in that low-income space need scale in order to achieve profitability, simply because the margins in that end of the market. Remember that an RDP house costs about the taxpayer about 135,000 Rand a unit, all in. The difference between 135,000 Rand a unit and 220,000 Rand a unit is not much, but it's a hell of a lot if you're going to start from zero. So you get to 135 and then you go back to zero because your income happens to be 1,000 Rand more. So the middle ground is the issue around land is very important. The issue around well-placed land is very important. That's why a focus on inner cities, on densification, and all those things is very, very important.